Morning traders, Paul here with GammaEdge. Today is Wednesday, the 28th of December. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Overall, the market models are still in cash or short. We had a reversal again of the short-term model as of yesterday. The lackluster behavior of buying or selling within the markets is noisy. And as a result, we are in a choppy environment right now, really not a lot going on. And so cash is probably the best place to be. Long term, we've been in a cash or a short position where we are effectively selling the rips. You'll see on the next slide that the slopes of what we call the ribbon are pointing downward, and that is a long-term cash or short type of positioning. The goalposts are at 4,100, 38 to the downside, unchanged, pretty much going to remain that way into the first of the year. SPX 3835 to 3870 is what we are calling transition. We think it's going to be difficult to push towards that 39 and hold into the close, just given the structure that we have. We have a lot of in-the-money puts overhead right now, and so we'll have just to wait and see what happens with those. The JPM strike, which is due to roll off at probably around 3 o'clock on Friday afternoon. 38.35 is the strike level, continues to dominate. Just remember, above this level, dealers are net sellers, which will push us back down, and below this level, dealers are net buyers. It really is dominating the conversation for the week, and when you look at the slide coming up, you'll see why that is the case. Delta-Moneyness for today, we're not expecting any calls to really contribute as they expire. We're not seeing a lot there. We do see a significant number of in-the-money puts, specifically at the 4,000 and the 5,000 strike, which could, if they come off intraday, we could see these bursts upward. If we wait until the end of the day because the SPX is cash settled, then that delta has to be adjusted, and probably futures would be the way to start dealing with that. We do believe that sequencing of trader actions versus the do nothing where we just coast through the day versus the monetize and roll will have a role today, so just play that accordingly. The market model, as I said, we had a failure yesterday, very lackluster. We closed below the short-term moving averages. I went on the voice channel and we talked about this around lunchtime, how we were looking fairly benign here, and then in the afternoon session we rolled over, as you can see. So closing below where we opened and closing below the short-term moving averages resets that short-term timer. We're looking for a behavior like this, and we frankly are not seeing it. What we have up here, this is what we call the ribbon, and basically all the slopes are in a downtrend, and when this is the case, we're in the mode of selling the rips and buying the dips. And right now we don't have a dip, and we don't have a very strong rip, so we're kind of sitting on our hands. Key levels, relatively unchanged. No major things to report. 41 to the upside, 38 to the low side. We'll say the projected expected move, conservative open high low close, not close, is now under 2%. So we are expecting some volatility to get dampened ahead of the end of the year. So just be aware of that. The SPX PM settled complex, so these are just the dailies that are trading, pretty tight transition range, as you can see here. Here's that 38.35. You can see also right here some pockets which could lend themselves to actual closing, but remember, as we get stretched below this 38.35, just because of this large negative level here, it pulls us back up, and as we get pushing north here, as we break out of the 38.70 and go up towards the 3900, we get pulled back down. And so we have to see a fairly significant change in the overhead structure on the PM complex in order to advance. So far, we're not seeing it. We just have some pockets which could be likely candidates, but you can see still a lot of in-the-money puts are dominating the conversation, and the in-the-money calls are not. So we've got a lot of speculation going on to the downside in terms of the deltas, and we believe that is going to be the case through the end of the week. 0 DTE, a little messy in here. Here's that 38.25, so just below the 38.35 strike. You can see 3800s today is definitely the line in the sand to the downside. Up to the north at 38.70 is again where we think we're going to have a hard time pushing north into this. It's possible, but we think it's not very likely. So the key is I think we're just going to remain in this range for the day. You can see a couple different areas which are dominant and would afford good hiding places into the close for tomorrow's setup. The overall combo complex, which is the AM and the PM, more of the same, right? Here's that 38.30 where we close, 38.29. Here's the 38.35 line, which is the JPM. This is everything turned on right now. 38.70 is that high level. We do have a couple pockets of gamma, which are flipped over here, but just note how strong the in-the-money puts are, as well as the out-of-the-money puts. Still a lot of speculation going on. We don't have the structure to advance, and everyone should be aware of that. This really needs to change, and we're not seeing that change right now. The expiry this week, so all we've done is just aggregated the today, tomorrow, and Friday. You can see all the air in the room here is being dominated by this 38.35 line, of course. A couple key areas, but again, it's very hard to progress north here when we see this type of structure. Although the gamma is positive above that 38.70 level, you can see the deltas are not. So until these puts are removed, which this is what's scheduled to come off this week, we're not going to break loose of this tractor beam that we have down here at 38.35. You can see down here to the bottom, there is the beginning of some in-the-money calls starting to dominate. So this is relatively good, but remember, this is what's coming off this week. So the 0 DT, 1 DT, and 2 DT are going to have a significant impact on how we start next week. So this is the next week view, and if we take away this week and just start looking at what we have next week, you can see transition is fat. We're not really changing anything. This is call open interest and put open interest, and you can see they're relatively balanced. So we're starting the new year, effectively flat, no changes there. Here's that 3800 line, which is pointing, this is where we start on Tuesday. And you can see in general, there's nothing really pulling us upward, but there is a strong dominance and speculation on deltas as well as gammas to the downside. This could be problematic. So we are thinking until this structure changes, we're definitely looking at flow being and bias towards the downside. Taking a look at the Delta-Moneyness structure, as I said at the beginning, there's nothing on 0 DTE. This is the edge in these pictures. There's nothing here happening on the call side, whether it's out of the money or in the money. Frankly, we're not seeing anything develop here. This is Friday. Over here, you can see contrast is a little wonky here for you, but there is a little bit going on right in this area. We got some short positions here. We've got basically some deltas that are pretty significant. So the 5,000 delta as well as the 4,000 delta that are up there are definitely a -1 in their deltas. And when we have that type of situation, if they're taken off intraday, we could see some burst to the upside. If they're not taken off and allowed to expire in the money, then as that delta collapses, we anticipate that futures would be used to compensate for that. So we might see futures bounce if we don't see them bounce intraday, we might see futures bounce into the overnight. We'll just have to wait and see what happens here. Last slide, taking a look at the combo structure, no changes really to report. So 38 to the downside, 41 to the upside. Here's that JPM line. They did grow, and they grew in part because of one, DTE is getting less and less. Remember, this is for Friday. This will roll off. But we're also seeing just some addition of puts to the downside. So some speculation from where we are that we could potentially have some weakness, and we're seeing some growth in the overall gamma short term as we move to the downside. Not seeing the same thing on the upside. Again, this structure is not conducive to the bulls. We're not seeing it. You can see that just in relative magnitudes and distribution that the puts clearly are winning the game here. So I know there's a lot of speculation, that we're downside fear and all that. No, I don't think there's downside fear. I think it's just playing the market, and there's an anticipation that we could, certainly roll off here. I'm struck by just how structured this is. This is a very deliberate type of curve that you see here, both on the half and the 0-0, the Livermore numbers here. The market knows what they're doing, and they're basically protecting their downside if we do go there. So that's it for today. I would urge you, if you have any questions or comments, come on in to GammaEdge.us, click on the pricing tab in the upper right on the web page, fill out the blanks, come on into our Discord and join us on Twitter. Follow us at GammaEdges with an S, and then here on YouTube. If you like today's content, let me know immediately by smashing that like button. That gives me immediate feedback that I'm providing content that you find useful. And of course, subscribe, because when you subscribe, you'll get notified when Taylor, myself, or Michael post a video. So with that, I bid you farewell. Make it a great hump day. Be safe, and hope to see you in the Discord. Thanks, everyone.